everybody. Lovely to be here. Master Investor Conference, number 4, I think. We are an East Coast Australia-based exploration company with a pathway to gold production. Alex mentioned we had a lot of projects in Victoria. We are seeking to monetize those, but I'll go through that in a minute. Our flagship projects are now up in Queensland, and they are gold and antimony, which some of you may have heard of. Antimony is an element on the periodic table. It is a very high demand, a metal in high demand at the moment. Applications in fire retardant, glass making, but most importantly, very high-end technology in military applications. So antimony's gone in price from about $10,000 a tonne to $70,000 a tonne. It traded a couple of weeks ago, and that's over like a 3-year period. But I will punch through these slides because we're very limited. We've got a big story, not a lot of time. That's the board. That's the main team. I think importantly, Owen Greenberger on the left there, he's our head of exploration. Terry Bates does a lot of business development and acquisition, corporate type stuff. Andrew Dawes is a resource geologist, and Anthony Sleeman runs our drilling and operations. That's us. This is actually, we've got $3 million in the bank, market cap of $6 million. So just divide that in half to get pounds. So remarkably cheap, low value for what we have. Project footprint. Main project, flagship project is Triumph Gold Antimony, and it's up in central Queensland. You can see up the top of that chart there, the map. That's Triumph. The other one is a project called Coonambula. Good luck trying to pronounce that up front. But Coonambula is a gold and probably more dominantly an antimony play. And I'll get to that in a minute. And then down in Victoria, we've got Rushworth Gold in central Victoria, traditional gold production area out of Victoria. And to the northeast, we have the largest lithium project on the east coast of Australia. And then we have some big polymetallic porphyry structures up in the northeast as well. So we'll go straight to Triumph. Triumph, this is a regional geological setting map you can see there. The red ones are our ground. It's central Queensland. The style of deposit is what they call intrusive related gold system. There are multiple million-ounce plus gold mines in the region and further north. Krakow, Mount Rawdon, Morgan, Ravenswood, Mount Lation. I mean, Mount Morgan has produced, Mount Morgan's there, 8 million ounces it's produced over time. Been operating for about 150 years. The Triumph Gold Project, they're aromatic magnetics, that picture over there, and the pink is that's where you get the highest level of magnetic response geophysics. The little bits in between, the sort of blue and the greeny areas, the areas of real interest, and we've got some, just at surface, fantastic rock chips up to 255 grams a tonne. The host rock is a fractured tonalite, which is a sort of granite, which is the intrusion, and very, very good data sets that we acquired. We acquired this project last year. Okay, so we recently updated the mineral resource estimate. So we've got 150,000 ounces of gold running at about 2.19 grams per tonne. That is all JORC compliant, so it's real. We have a very clear pathway over the short and medium term towards production of gold. 150,000 ounces is not enormous in terms of resource numbers, but we can see a very clear pathway to 500,000 ounces, all within 100 metres of surface. And below that, down to 200, 300, 400 metres, we think there is enormous potential there too. And there's only been 3 holes into this project, drill holes, that have gone deeper than 150 metres. They're all mineralised, and we're carrying anything up to 7, 8, 9 grams a tonne gold. So it's a very exciting project for us. It's all in front of us. Okay, so that's a little bit more on the MRE. I'm going to punch through this one. The resource expansion potential, so 90% of the current resources within the first 20% of the identified strike. So there's an enormous amount of strike length that we can continue to explore and prove up, and no reason to believe that it's not there at this stage. It's all within 100 metres of surface, this resource, which is not deep. We've actually got mine plans that our resource geologist has been working on. We can mine effectively down to about 100 metres depth. So it's open along strike. Open means untested and probably gold bearing along strike, east and west, and at depth. These are a couple of drill holes. Just the picture on the right, see the photograph at the top there, that's a bit of drill core, and that's basically sulfides. So you've got the host rock, which is the tonalite, you've got the quartz veins pulsing through the country rock, and then you have the sulfides. The sulfides are where all the gold is located. It's not free gold, like you might expect, not nuggets. It's all little microscopic bits of gold contained and in the sulfides, which through processing you liberate. The metallurgical test work that's been done on this project so far is very good, and we're getting recoveries in very simple carbon in leach CIL type processes of up to 96% of the gold, which is a great recovery rate. So the purpose of that drawing below, the diagram, is to indicate that where the green is, they were the interpreted veins below surface as a part of our mineral resource estimate. But we were seeing, once we'd gone through that to retest it, we went further because we saw some more sulfides, and lo and behold, 10, 15 metres out, we continued to find more and more veining, which had not been identified as a part of the project in the first place. So there is tremendous upside potential in this project. Rock chip sampling just at surface, unbelievably high grades, 9.9 grams a tonne, 47 grams, et cetera. But rock chips are at surface, it's not a mine. So, you've always got to take that with a grain of salt. What this is a diagram of, if you can imagine looking down from a drone, if you like, at the subsurface structure of the Earth, and to the left, and that blue thing, that is the actual intrusive. And then you've got those little green spots in there that indicate what we've identified as mineralised zones. The real key to this slide is there is enormous potential at depth on this project, and we continue to explore that. There's only, as I mentioned, 3 holes deeper than 150 metres. We really need to be drilling 400, 500, 600 metres below surface to, and all the holes that were drilled below 150, they were all mineralised. So they were all carrying gold. So that's the upside potential of this thing. Coonambula antimony gold. The rock there you can see is a mineral called stibnite, which carries the antimony. The stibnite can only contain up to around 49% antimony. That's its maximum kind of capacity to carry. And that is almost pure stibnite with around 49, 50% antimony in it. And these were rocks at surface. There was an old mine there many years ago called Banshee, and they took about 30,000 tonnes of antimony out of it. Antimony is a cracking metal. If you don't know about it, I'd really encourage you to have a good look. Antimony is, there's no mines in the United States, and it's become this geopolitically sensitive metal. No mines in the US. One producing mine in Australia at the moment, a second one coming on later this year, and this Coonambula antimony project that we've dealt on and that we are farming into is going to be very exciting for the company going forward. We can earn up to 51% of the project for delivery of 4,000 metres of drilling and 250,000 of cash, which we'll have done within the next 18 months. So I would encourage you to have a very good look at antimony. It's less abundant than gold in the Earth's crust. So it's not a lithium Mark II, where everyone thought lithium was incredibly difficult and rare and whatever. So it turned out when people started looking for it, it's everywhere. And hence the collapse in the lithium price in 2023, where it fell during 2023, 83%. It's the biggest fall I've ever seen in any commodity in a 12-month period, certainly in my lifetime and even through history. So that's Coonambula, antimony, gold. Those drill intercepts, which were drilled back in 2014, are in the top 20 drill intercepts for antimony in Australia. There's nothing better than these drill intercepts. So we're very excited about it. Excuse me. So just moving on, a bit more about the Coonambula antimony gold. More there, and of course this presentation will be available should you wish to interrogate it further later on. Technical drawing about where we're going to be drilling when we get to Coonambula, which we expect to start drilling in about July, August this year. And it has enormous potential. So Victorian projects, we are seeking to consolidate and divest a lot of these projects that we have in Victoria. Our footprint there is about 7,000 square kilometres, which is a very large area of land. It wasn't a land grab. Every square metre of that land in Victoria we have deliberately pegged for its gold, or in fact, one of the projects on there is called Mount Unicorn, and it is the 6th largest molybdenum resource in the world today. It's low grade, it's what they call a porphyry, but it is nevertheless, there's a lot of molybdenum. And molybdenum is an interesting metal. 2015, it was the worst performing commodity in the world. Went down to $4.50 a pound, trading at around $30 a pound now for molybdenum. The others are mainly gold focused, and one of those projects there is a lithium project, the Dorchap lithium project. So we're seeking to consolidate these and divest them, and we are in discussions with various corporates at the moment where they'll come in and take ownership of them, but we will retain a free carried interest in each of the projects of roughly 20% through to the financial decision to mine. So beyond that point, we have to proportionally fund our stake, but we will own 20% of the economics of them through to the investment decision to mine, which will be, in some cases, many years away. In others, less. Rushworth is that's the one project that we're going to hang on to in Victoria 100%. Rushworth has all the potential of a mine in Victoria, which is only about 40 kilometres to the southeast of where Rushworth is, called Fosterville. Fosterville is the highest yielding substantial gold production mine in the world. They produce about an ounce a tonne, or 32 grams or whatever it is, per tonne. And the deeper they go, the grade gets higher. And their all-in sustaining cost of production is roughly $500 US. It's owned by Agnico in Canada, and it is the best mine in the world. But they are now struggling to extend their reserves, despite having something like a dozen drill rigs operating 24/7. They don't seem to be able to increase the reserves. Last time I looked, they had about 3 million ounces. But anyway, Rushworth is remarkably similar structurally. This is what I call a drill-intensive kind of project. We've got to drill a lot of metres to prove up our geological concept around it. But I still think this thing is a cracking project. We've I think we drilled about 4,000 metres there last year. Now we've kind of moved back up to Queensland, and that's where all the focus is at the moment. To the west and to the south on that map, we have the Costerfield antimony mine. The strike length on Costerfield is actually extending into that green hatched area, which is ours, but it's under application. We expect to get that granted in the next couple of months. And also down to the south, there is more antimony striking up to the north into this area. So once that's granted, we'll do some drilling there, and I think it has very high potential for antimony, as well as the gold. Northern porphyries, they're not for a small exploration company to drill out. They're very expensive to drill because you've got to do so much. You've got to go incredibly deep. I mean, porphyries, you're drilling anything up to 2,000 metres depth, that sort of thing. Very expensive. But highly prospective ground on that red hatched area. You can see on the map, we've got 4 outcropping porphyries, and porphyries don't outcrop that often. So to have 4 in a very small area like that means they're probably all part of the one big system. And yeah, they hold a lot of potential. But again, they're a joint venture type arrangement. We won't spend our shareholder money on it. We'll get someone else to spend on it and earn in on the economics. Okay, so I'm just going to, Buckland Goldfield, fantastic, large-scale, shear-hosted gold project up in the mountains. Dorchap Lithium, I mentioned. Talon Dune, Sandy Creek, gold and antimony. That's really a story around gold in granite, as well as very high and historic mining for antimony. That's a project timeline, shows you what we're doing on what project over the next 12 months or so, and what we expect in terms of visuals from the drill rigs, resource upgrades, all that sort of thing. And we're very, very busy. That's me. And that's it. We do, I guess one thing I'd just like to mention as well is that we, unlike most companies, actually operate our own drill rigs. And our experience in operating our own drill rigs has been very, very positive. We drill at a cash cost of about $100 a metre, whereas a contractor who would come in would charge you anything $300 to $400 a metre. So we've got our own drillers, our own drill crews, our own drill rigs, and we can drill a lot more metres than most exploration companies, far cheaper. We operate our own transportable camps. We don't pay accommodation costs, which can be $200 or $300 a night per person. All we pay is a fixed rate of food for each of the guys on site, which is about $30. So I think we're really well positioned. For the first time, I was saying to Alex earlier, we are incredibly, for the first time in the company's history, we've got a lot of ducks really lined up. I happen to believe the sector's going to come back to life this year, and we're going to start to see the trickle-down effect of capital from producers, developers, down into the exploration space. But at the same time, we're going from pure exploration up into development and then production.